It's October 2025 and something big is happening in the markets. Gold has soared past $4,200 an ounce. Bitcoin has surged above 126,000 before a quick pullback. For the first time ever, both are hitting all-time highs together. And this isn't just a coincidence. There's a deeper story unfolding beneath the surface. Gold and Bitcoin, the two symbols of value, are rallying in unison. This is a message from investors about trust, or the lack of it. The timing is striking. The Fed has cut rates again this year. The economy is teetering on the edge of stagflation. Washington is in yet another spending standoff, narrowly avoiding a shutdown. Inflation is stubborn, and the US dollar is losing its shine. In this fragile environment, investors are seeking refuge. They're turning to hard assets like gold and Bitcoin. The last time they surged together, uncertainty loomed large. But this time, the stakes feel even higher. The correlation between gold and Bitcoin is at an all-time high of 0.85. The old world and the new are moving in sync, revealing a troubling truth. Confidence in the system is cracking. What's driving this alignment? What does it mean for the future of money and power? And most importantly, what happens when trust in the old system finally runs out? To truly grasp the rally, we must look beyond just price charts and headlines. This isn't merely about investors chasing returns, it's about survival. For centuries, gold has stood as the ultimate insurance policy. It protects against political lies, currency debasement, and our addiction to debt. Gold carries no counterparty risk, no promises, just weight. Central banks understand this better than anyone. They're hoarding physical gold at record rates, the largest accumulation since the 1970s. Not for profit, but for protection. In 2025 alone, global central banks bought over 1,000 tons of gold. Nations like China, Turkey, and India are leading the charge. This is a quiet rebellion against dollar dominance. It shows that even sovereigns are diversifying away from trust in Washington's balance sheet. When the world's official money managers stack gold, it sends a powerful message. Bitcoin, on the other hand, plays a different role. It's not a relic, it's a rebellion. A decentralized response to the same distrust. Its rise signals a generational shift, from those who believe in the old order to those building the new one. Institutional investors, once skeptical, are now allocating. Pension funds, family offices, and even sovereign funds are testing the waters. The Fed's rate cut in October sparked another wave of liquidity. Money, once trapped in bonds, began flowing toward risk assets, but not the kind Wall Street expected. Instead of equities, much of it rotated toward alternative stores of value. Hard assets that can't be printed or seized. The result? Bitcoin and gold became twin signals. One from the digital future, one from the physical past. Both flashing the same warning. The age of easy money is over, and the age of hard value has begun. There's a deeper story unfolding right now, one that's hiding in plain sight: capital rotation. In 2025, gold outperformed Bitcoin by nearly 20%, drawing in investors as central banks bought up the metal amid rising geopolitical fears. But every market imbalance invites a rebalance, and that's exactly what's happening now. Hedge funds are shifting their strategies, recognizing that while gold is strong, Bitcoin offers that extra torque. When the market senses a policy error, capital flows to what moves faster. After months of gold dominance, Bitcoin is reclaiming its momentum. Traders are calling it the catch-up trade, while analysts refer to it as the hard asset awakening. Either way, the message is clear. Faith in fiat is fading. Global tensions are amplifying this shift. China's trade restrictions on rare earth exports are rattling supply chains, pushing commodity prices higher. Meanwhile, the EU's energy standoff is reigniting fears of stagflation. Each headline adds fuel to a growing fire in every investor's mind. What if this system isn't as stable as it seems? Gold and Bitcoin have evolved beyond mere assets. They're now signals that something is breaking. From Wall Street to Singapore, portfolios are being re-engineered. The old 60-40 model of stocks and bonds is fading away. A new ratio is emerging. Risk assets balanced by hard assets. This shift isn't just speculative, it's structural. As one strategist put it, we're witnessing the monetization of distrust. Every rally hides contradictions, especially in the world of Bitcoin and gold. Critics say they can't both be safe havens. One's digital and volatile, the other's stable and ancient. But markets aren't driven by logic, they're driven by psychology. When fear peaks, investors hedge in every direction. The 2025 convergence is as much about psychology as it is about finance. Inflation is still above target, wage growth has stalled, and consumer confidence is shaky. The Fed's projections show slower growth ahead, while the U.S. deficit keeps rising. That's not a recipe for stability. The market feels it. When faith in the future wavers, investors flock to what feels real. Gold feels real because you can touch it, while Bitcoin feels real because it can't be frozen. Together, they form a new kind of insurance. One analog, one digital, both outside traditional authority. But here's the paradox. As both rise, they reflect fear, not prosperity. Gold rallies when trust in currency collapses, and Bitcoin surges when faith in institutions erodes. When they rise together, it signals a warning, not optimism. We've entered what some call the trust crisis cycle. It's not just about inflation or deflation anymore. It's about confidence deflation. Every policy error, political divide, and missed inflation target chips away at belief in the system. In that vacuum, hard assets thrive. So where does this story lead? The simplest answer: toward revaluation. The global economy is repricing trust itself. Every chart you see, gold at record highs, Bitcoin climbing past 100,000, isn't just a market event, it's a vote. A silent referendum on faith in government, currency, and debt. The higher they go, the louder that vote becomes. In private meetings, central bankers admit what they won't say publicly. They're preparing for volatility unlike anything in decades. In 25, liquidity cycles are shortening. Monetary tools are losing potency. The line between fiscal and monetary policy is blurring. That's why gold and Bitcoin matter. They're not just investments, they're thermometers. They measure the fever of the global financial system. The question isn't whether they'll stay high. The real question is, what has to break for them to fall? For now, the signals are clear. Hard assets are leading. Fiat systems are straining. Investors are diversifying, not because they want to, but because they have to. The 2025 surge is more than numbers on a screen. It's the story of a world losing faith in its own promises. As that faith erodes, the old and the new, gold and Bitcoin, march together into history side by side. They're telling us what words never could. The era of trust is ending. The era of value has begun.